Our 2012 forecast. Now this is thoughtful. Hello, I'm Nikki Wang in Shanghai. This week, we're bringing you a special episode of Thoughtful China, our first annual forecast show. We've gathered 3 leading executives in China's ad industry for an extended discussion about who's spending more next year, where they're investing budgets, and what trends are on the rise. Plus, our own PT Black will tell you why it's so hard to make predictions in China. But first, with us is Justin Billingsley, Saatchi & Saatchi CEO Greater China, Tom Doctorow, JWT's Area Director for Northeast Asia, and Wen Fan, Managing Director at Wings Isobar. Thank you for being on the show. Now, thanks so much to come take your break from all the budget meetings. We know it's a very difficult time of the year. What are you hearing from the clients about spending next year?
A lot of energy. I mean, one of the challenges is that globally there's less and less visibility for a lot of our multinational clients, and it's nice for our China clients to go into the global meetings and the regional meetings with some visibility, with some confidence on growth, with some proven numbers, and it's easier to get some of the global money flows into the market here when there's a story to be told, when there's such little visibility outside. So from multinationals are feeling pretty confident.
Well, I'm a little bit more skeptical, actually. I mean, so far there's no apples falling from the tree. But I do think that there's quite a bit of nervousness and a little bit for some of our multinationals for a wait-and-see approach. And so nobody's bullish in our forecasting right now. And I think that there's a lot of rationalization going on. You know, some of our financial service clients, some of our IT clients, you know, they're really waiting to see what's going to be happening, and they're structuring themselves more efficiently.
How are things on your side, Win?
Yeah, I would echo both of them because in a lot of our clients' world, China is still the story, and there is still a lot of confidence here. Yeah, but also they've been very sort of conservative at this point of time because after all, they've only been through the first round of their budgeting, and normally we will see a more bullish confidence pulling in later half toward the end of the year. Yeah.
I think that one of the things that's going to be one of the biggest problems is that media costs still seem to be absolutely skyrocketing. I mean, I was talking to somebody in one of the major media houses, and television advertising is still projected to have an inflation rate of 30%. When she told me about her top 20 clients, all right, their average budget increase was 12%. So right there you can already see that the dollars are stretching much less further. So this is putting a lot of pressure on a lot of the marketers to explore quote non-traditional unquote approaches to building brands. And historically, since time immemorial, the most challenging part of being in China is the cost of building and establishing brand equity. So it's just getting more and more difficult. Speaking
for digital media, the inflation also happened there, but not as much as TV media. But the client has already starting to spend more and more on digital media in terms of video playing, using video site as an alternative channel for their video content or video story, brand story to tell.
There probably is more opportunity for creativity in the non-broadcast media. But I see even in digital right now, all right, because digital prices are going up astronomically. I mean, I read that the CPM in first-tier cities, the cost per thousand of digital, is around 50% of television. All right, that's expensive. I mean, that's a chunk of money. In second-tier markets or lower-tier markets, I heard it was 25%. That's still expensive. So now anything that you're doing in digital is relatively risk too.
Let's get back to your point about second, third-tier cities. Would this be a massive focus for a lot of clients, such as FMCG clients, for further expansion in China?
I think they're a lot further down than that. I think the important thing when you talk about different tiers of cities is these are tiered places, not tiered people. It's not like Shanghai is full of these beautiful,
Absolutely.
tall,
Absolutely.
wealthy people, and Urumqi is full of short farmers.
There is middle class in
Everywhere.
every single city in China.
There is a pyramid of tier 1 through 5 in every place in China, and so the main challenges in going down those are different marketing challenges than they are necessarily creative challenges. The stories travel relatively well. There are biases in telling those stories that work better in lower tiers, but the main challenges for these brands are in distribution channels and pack sizes and pricing and cold distribution if that's your business. These are much bigger barriers. But as Tom said earlier, another massive barrier is the price of getting there. If you haven't got there now, the price of trickling down into these places is a very big barrier to entry.
Ford, for example, is one of our auto clients, and it's no secret that by far over 50% of auto sales growth is taking place in the lower tier markets, and these are not being sold to mass market consumers. These are being sold to middle class consumers. Of course, they're newer middle class consumers, so you need to have more of a reassurance buy. Safety becomes more important, even more important. Fuel efficiency becomes even more important. But I think that I agree with what Justin's saying. Sometimes geography is a red herring, all right? When really, other than the operational complexities of knitting everything together, the real two dynamics or variables to talk about the diversity of China market is age and income, and operationally, of course, is a challenge geographically.
And going back to the last point about digital, there is no digital tier 1. There's no digital tier 5. So you can't have a fundamentally different brand dialogue in tier 1 versus other tiers if the digital experience they go online to learn about and converse in feels different. And so making sure that thread goes through all of the tiers is critical.
What about your clients? Where are they focusing on right now?
One of our key clients is many of our clients are actually at FMCG, and most FMCG they don't own their own channel, and the key trick for them to getting into lower tier city is how do we activate those consumers in those cities or those places where they don't have full control of their distribution channel. So, and digital, especially mobile, in the future will become one of the key vehicle for them to actually communicate with them and also getting their participation or even eventually purchase.
On that note, let's hear a thought or two from PT on why it's so hard to make predictions in China.
Forecasting the road ahead for China can be a daunting task. The economy here is structured like no other, making it hard to find benchmarks or make comparisons. The scale of the economy amplifies that uniqueness. Nothing is predictable when counted in trillions. And all of this is complicated by a difficult data environment, systemic conflicts of interest that lead to economic updates looking more like Christmas lists than breaking news. That makes it all the more important that forecasters do some primary research themselves. What are people talking about on the street? Is it a vacation overseas or the rising price of oil? But there is one strategic document that sometimes gets under-scrutinized by Westerners. That is the 5-year plan, a comprehensive planning document that lays out the general direction and priorities of the central government in Beijing. And here in China, the priorities of Beijing are the priorities to watch. In 2012, the nation activates its 12th 5-year plan. It calls for massive investment in green technology, in energy conservation, and in environmental protection. It adjusts economic fundamentals, encouraging domestic consumption and reducing reliance on manufacturing for export. A number of industries will receive special treatment: healthcare, energy, technology. It addresses economic inequality, building affordable housing, investing in underdeveloped region. It calls for increasing the minimum wage by 13% a year for the next 5 years, which is an 84% wage increase by 2015. There's a lot, of course, the plan doesn't do. For instance, liberalize the finance sector. The implications are far-reaching and touch every corner of life here. It's worth a read. After all, when the road ahead seems rocky, it never hurts to look at the map.
Thanks, PT. So is luxury going to continue to go strong?
Yes. I mean, luxury is fundamental to Chinese identity. One of the distinct, not only do Chinese buy a lot of luxury, both on the mainland and off the mainland. Oh, here's an interesting statistic I read, that 2% of visitors to France are mainland Chinese. They purchase 15% of luxury products in France. But
they're purchasing it outside of China. How do you convince?
50-50, nobody knows the exact statistics, right? But the fact is that luxury is booming because luxury in China is a tool. Luxury is not something that is an indulgence. It's not something that makes me feel good. It's something that is deployed and should provide dividends to help you move in life.
Let's talk about auto industry. I know you are very positive about it, Tom, but there are actually studies that show that possibly growth for next year would be less than positive. What do you say about that?
Well, first of all, I don't know, okay, because I think that a lot of it depends on signals that consumers take from government in terms of the best time to buy, and I don't know what the answer to that is. All I'm saying, though, is if you take a look at China over the next 5 years, and you see what's happening with infrastructure, you see what's happening with the economies of second, third, fourth tier cities, there's a lot of room for future growth.
In what other categories do you see growth particularly strong in 2012?
What do people entering the middle class spend their money on? I think we're going to see very strong growth in healthcare and wellness. I think we'll see growing spend in homewares as the role of the home continues to change over time from being a place that I sleep and is very private to a place that the middle class is increasingly doing small amounts of entertaining and inviting others into. So there's investment in the home, so we see the IKEA.
Excuse me, though, I mean, I agree with you. I do agree with that, but I think what will be interesting, though, is when you go into the home, I don't think Chinese will ever, and I could be wrong, all right, invest in a very expensive bedspread, right?
No, that's the second level of defense. I'm talking about the first level defense.
Yeah, so near the front door, the refrigerator. All right, so you know, boy, that's my expensive German refrigerator.
Look
that's going to grow.
is,
all right,
correct.
you know, or the floorboards near the front door. That will be more expensive.
Correct.
So
and the screen on the wall and the
what screen?
The
TV.
screen.
Oh, sorry. I thought we were getting artistic here, all right? Like Japanese prints.
The screen on the wall, the lounge. No, it is. That'll be the safe zone, but you won't get past the doors to the bedroom for some time.
Toilets. Will Chinese ever invest in expensive premium toilets?
No.
When were your predictions?
I would say that cosmetic and personal product will continue to grow, and especially when just like what Tom said, especially the lower tier cities are starting to recognize brand, and so those right now it's especially for brands like from multinational companies like P&G, Unilever. Lower tier cities are starting to get into those tier of brands, and those brands are getting growth. I would say in the near future.
I'm going to go back again in terms of growth categories to casual fashion, because I think that China's a slightly odd market. That for many years casual fashion was the sports brands, the Adidas, the Nikes. I think now you're going to see for the first time a lot of people buying, you know, mid-tier Western casual fashion brands. And I think that's going to spread like wildfire because they look good and the price points are right. And I think that a lot of the marketers have done a great job at tailoring the product and adjusting the price-value equation for this market.
And actually, these clients are very aggressive. In one of the casual fashion brand you talked about, and they are talking about double their number of store in the next two years.
But I still think real estate is a big problem. Real estate prices are absolutely skyrocketing, so that's going to break it a little bit. But basically, you've got Uniqlo with 4 stores in Xiamen. Who would have ever thought?
Justin, you've worked on the client side before. How are marketers in China behaving differently when it comes to making decisions for budgets?
They focus on saving money in the wrong places. Going back to Tom's message about when all your other costs are going up, the amount of money you invest in creativity is under challenge immediately. And I was lucky to work for brands where the brand was at the heart of the business. It wasn't a function. I mean, Coke, Orange, iconic brands that knew that they needed to continue to invest in the stories of their brands. So I was very lucky. Here, we see the squeeze on whether you need this aspect of a production, can you cut this corner here, and just things that save a little bit of money but make a massive difference. Probably another thing is the time horizons. I mean, my multinational clients now, we're doing their mapping for their brand stories for 2013. For my local clients, we're doing it for November. And the time horizon we deal with the different types of clients here is very different. But it is nice to be an ex-client here. I think it's nice to sit down with a client and have walked a mile in their shoes and know their tensions with their CFO and their board, this and what this planning cycle feels like from their perspective. So, yeah.
I mean, it's nice to have credibility.
To have other sources of credibility.
And to wrap up our discussion, what would be your key focus for 2012 for your agency?
Steady as she goes, pushing forward with our existing strategy.
Our push will all be about integration, being the right partner for the specialist agencies, whether they be channel execution or digital media agencies, to help brands be as consistent as possible and tell the most powerful story possible.
And getting our digital identity right.
When?
And for us will be two keywords. The first one is solidify. We need to get our practice more and more solid, and because we're facing stronger and stronger challenge from the client in terms of our thinking, because we become more and more an important part of their communication mix. And the second thing is that it can never be dropped is innovation, because we need to keep up with this ever-changing landscape of digital.
Wen, Justine, and Tom, thank you for being on the show. Now this wraps it up for us today. Be sure to subscribe to us on Tudor and YouTube. You can also follow us on Weibo and Twitter. See you again.